Good afternoon, ladies and gentlemen, and welcome to our virtual briefing here today. On behalf of the Circle, we always pay our acknowledgement to country, and we pay our respects to the elders past, present and future, for they hold the traditions and hopes of Indigenous Australia. My name is Johnny Wise, founder and managing director of the Circle, and welcome everyone here today, both physically and our guests joining us virtually from around the country. We say welcome to you for the special session with our wonderful colleagues at Judo Bank, and hosted with very fine partners, Ashurst. And we thank them both for their wonderful participation and look forward to our briefing today. Today's session is made available courtesy of our host here in Sydney, Ashurst law firm. We say pay respects to their teams for hosting us today. And we also pay particular tribute to Joseph Healy and the team at Judo Bank. Joseph, we've had a very long relationship with, both yourself and David. We've seen your career evolve, and with great admiration, the challenge that you took on to create a new bank and to find a gap in the market and ensure that our SME sector in particular is well serviced with their growing needs in both times of opportunity and challenge as we have today. And we pay our particular respects to our colleagues in Melbourne and wish you all support. So ladies and gentlemen, the format for today, I'll be followed by Stuart Dullard, partner corporate transactions at Ashurst, who will formally introduce our panel. And we welcome our panel here today. We have Joseph Healy as co-CEO and co-founder of Judo Bank, Warren Hogan, the Chief Economic Advisor of Judo. Joining us virtually, Natalie Reymond, Director Reymond Group from Melbourne, and a moderator, wonderful Brooke Corte. Brooke, it's always wonderful to have you. So ladies and gentlemen, without further ado, again to our virtual audience, thank you very much for joining us. We hope you enjoy this very special session. Over to our kind host, Stuart Dullard. Thank you.
Well, thank you very much, Johnny. Ashurst is delighted to be partnering with the Trans Tasman Business Circle and Judo for today's roundtable discussion, or should I say virtual Q&A session. The topic is the budget, the bottom line, and the road ahead for the SME economy. Now, for those of you who don't know, Judo is a bank that's purpose-built to serve Australia's SME sector. It gives them vital funding to capitalise on the opportunities that they have in front of them, and it's funding that they may have otherwise missed without Judo being in the market. Now, Ashurst has worked with Judo for a long time, right from its incorporation, advising on its application for its banking licence, multiple rounds of capital raisings, its securitisation programs and other debt facilities. And it's really been a privilege for us to play a very small part in Judo's success. We're really looking forward to today's interesting discussion on the road ahead. And I'm really pleased to be introducing today's panelists. As Johnny mentioned, Joseph Healy is the co-founder and co-CEO of Judo Bank. He's a career banker with deep experience in the sector, having worked at the National Australia Bank, ANZ, CIBC World Markets, Citibank and Lloyds. He's a fellow of FinCEA and the Chartered Institute of Bankers in Scotland. In addition to being an industry banker, he's an erudite thinker. Joseph holds a number of graduate and postgraduate degrees and is an adjunct professor at the University of Queensland in their business school. And as if being co-CEO of a new bank isn't enough, he's currently completing his Masters of Science in Psychology and Neuroscience at King's College in London. He's also an accomplished author in all his spare time. He's written 3 books, the most recent of which was published in 2019, entitled Breaking the Banks: What Went Wrong with Australia's Banking. Joseph was also a director of the Football Federation of Australia from 2010 to 2018, and I'm sure he doesn't mind me mentioning that he has 5 international football caps for Scotland at a youth level. Warren Hogan. Warren is Judo's economic advisor and the managing director and founder of EQ Economics, which is a consultancy firm specialising in economic and industry analysis. Warren's worked for many years with New South Wales Treasury, Westpac, Credit Suisse, and ANZ, where he held the position of chief economist from 2009 to 2016. He was also appointed principal advisor to the Australian Government Treasury in 2016, supporting various Treasury functions, including the Macroeconomic Group and the Foreign Investment Review Board. He's also a regular in Australian and international media and a columnist for the AFR, and is regarded as one of Australia's top economic analysts and commentators. We're really pleased that he's here with us today. Now, remotely on the screen, we can see Natalie Reymond, a director at Reymond. So since moving to Australia in 1983 from a native country, France, Natalie has established herself as a key figure in Melbourne's hospitality industry. Natalie completed her bachelor's degree in international trade in 1998 and went on to work at some of Australia's most premium wineries, including Mount Mary and Bass Phillip Estate. She later became the head sommelier at Jacques Reymond in 2000 after extensive travel and work experience throughout Burgundy. She's a member of Sommeliers Australia and has won the Best Food and Wine Matching Gourmet Wine Award not once, but twice. Over the past 2 decades, Natalie has established a portfolio of restaurants, including Bistro Gitane in South Yarra and Hotel Gitane in Pran, and Frederick Bar and Bistro in Cremorne. And we're very excited to have her here today through the technology of Zoom. And last but definitely not least, Brooke Corte is the host of Money News, which airs across the 9 radio network. She's been a business journalist for nearly 20 years, and Brooke spent most of her time prior to joining 9 as anchor on Sky News Business. Brooke led the coverage and analysis of some of Australia's biggest business and economic stories over the past decade, and she's also performed the role of Chief Business Reporter. After spending 3 years as the host of First Edition, a national breakfast show on Sky News, Brooke became the face of Your Money channel flagship program, Your Money Live, which is dedicated to personal finance and economic news. Brooke is also the proud wife and a mum of 3 young children. It's really my pleasure today to extend a warm welcome to all our panellists, and I'll now hand over to you, Brooke, to get us started. So thank you.
Thank you, Stuart, for those comprehensive rundowns of who everyone was, because I had a little jotted down some notes of who I think everyone is. Joseph Healy on my right here, someone not scared to hatch a bold plan on a Friday afternoon in a pub with a mate, and someone who's a champion of small business and the small business economy in this country, and someone who's not afraid to rattle cages when we talk about banking. I always love interviewing Joseph. And Warren Hogan, uncensored, unfiltered, one of Australia's most favourite economists, I'll say that. And Natalie with us in Melbourne. Natalie, a celebrated, successful small business owner, and Natalie providing a very important role for us today, in that, Natalie, you are ground zero for small businesses in this economy right now, because of course, Natalie was gearing up to be here in the room with us today, but is currently locked down in Melbourne, homeschooling, businesses shuttered. Natalie, I'd love to open with you. We've got our virtual audience and people in the room here. When we're going to have discussions today about small business, I think we are recognising that small businesses right now are navigating a certain type of economy, and I'll borrow a phrase and call it an absolute beast, because we have an economy where we're describing it as the envy of the world, and yet Natalie and 5 million other Victorians are locked up in their homes. We've got businesses saying that they're better off than before we even had the pandemic, and yet we look around the CBDs and they're a ghost town. And we have some industries in absolute boom conditions, and yet their biggest problem is they can't find people with the skills that they need, or the materials even that they need. So there's some very complex and competing themes that I think we're going to be discussing today with the panel. Natalie, first to you, maybe you can describe the current situation and how this lockdown is different to the other ones that you've experienced.
Thank you, Brooke, and thank you everybody for having me. I think this one is a lot more obviously exhausting and just the mental toll on everybody. Obviously, there's no government support either to the extent that we've had before. And it's just, again, the unknown. Unfortunately, you know, as you're all aware, this is Victoria's 4th lockdown. So this one is really, really hurting. The savings, you know, everybody tried obviously to get the savings a little bit in there and to sort of like, we certainly did anyway over the last sort of like, from when we reopened beginning of November, we've, you know, run a very, very tight ship, which we always do, but this was extra tighter, which was fortunate as we do have, you know, some savings to get us through. Things today obviously don't look that positive for reopening again by the end of the week, but we'll see. However, if this does go into a 3rd week lockdown, I think that, you know, will significantly impact all us SMEs. There's only so much savings that we have, and we still have to pay all our staff. So yeah, it's really hard, this one.
And this one, you didn't actually do the pivot. You didn't go to takeouts. You didn't do hampers. This one was different from that perspective too. You've just shut up this time.
This time we just completely shut up. We, you know, again, with the borders being closed, we actually have quite a shortage of staff. The hospitality industry in particular is all suffering. It's not just in Victoria, in Australia wide. So to get our staff to kind of, after them working so long, we were like, first, you know, it's going to be a week's lockdown. So it was like, okay, everybody just lock down for a week and just take a bit of time out. Obviously now it's 2 weeks, but for us to, pivot and do takeout and redo our hampers, it's just not cost effective. In fact, you know, with no JobKeeper, it's actually negative for us. So this time we're shut up and holding tight,
Yeah, and so what happens if you go into a 3rd week?
We still can't. We spoke about that at length this morning with the possibility, and it was like, look, financially, it just does not weigh. The one thing that it does do is obviously keeps your brand out there and active, in the sense that, you know, it keeps your customers involved. But honestly, as well, like the amount of emails I received over the weekend of support from the customers. Everybody understands now the situation quite well, that there's just no point. If it goes into a 4th week, which I doubt it will, but I'm assuming then obviously the federal government has to kind of step in as well, and then we'll see. It's day by day, really. Yeah,
exactly, of course. Let's bring in you here, Warren. I wonder what your sense, you know, we have got businesses saying, oh, business has never been better, but then you've got obviously what's happening in Victoria and the tentacles of that far and wide. You know, anywhere in Australia you can be affected by that. So what are you picking up with the current situation?
Yeah, well, this lockdown, we still are trying to work out what it means. I'm suspecting it's going to be worse than the previous ones because of the absence of JobKeeper. My analysis tells me JobKeeper essentially was about a quarter of it would support people who would have lost their jobs, like casuals, and the rest supported businesses who would have otherwise who wouldn't have laid off staff, who just kept paying wages. So the absence of it means businesses are the ones who are really wearing it in this lockdown. And I think, again, there's a lot of measures of confidence that are very, very high in this economy. Capital's cheap. There's a lot of government spending, but I think there is still a fragility out there. And I think Natalie just summed it up. Now, whether that's here in New South Wales or in Western Australia, I can't tell you. But I think we're going to have to really keep a close eye on the next couple of weeks and what Victoria looks like. But otherwise, I think the economy is facing these challenges around capacity constraints. I mean, the big picture is an economy that is being pushed hard by government stimulus, being pushed hard by a central bank that is looking to get much higher growth and lower unemployment. And what I'm worried about is that we just don't have the capacity to fulfill those ambitions. And what does that mean? And economics tells you that if your Q's not moving, your P will, that is prices, and that's inflation. And I think we're just all eyes out. All macroeconomists should be all eyes on inflation over the next 6 months.
Yeah, which I think we should definitely talk about in terms of a planning perspective. And on the current situation, Joseph, you're actually nodding. What are you seeing in your own, amongst your own customers?
Well, I think really to sum up what others have said, it's before this outbreak of COVID in Victoria, I think we were all really impressed with the resilience of the economy and the SME economy in particular. Many, and I would include myself, 9-12 months ago were forecasting quite a pessimistic outlook with higher unemployment and businesses failing. That has not transpired, thankfully. And then we saw business investment jumping up quite significantly in the GDP figures that were announced last week. When I look inside the bank, the pipeline of work that we have got is at its all-time high. So all of those indicators were suggesting a very buoyant second half 2021 calendar and a very buoyant 2022. The issues of the psychological blow to confidence in Vic and the potential for that to spill over and remind people just how fragile things are shouldn't be underestimated. And as Warren mentioned, we are seeing, it's not yet evident in the stats, but it's when you speak to business people from all sectors, the buildup of inflationary pressure is quite pronounced. And if you think about businesses that are importing, getting access to supply chain access is becoming really quite challenging in a number of industries, and costs have gone up materially. That hasn't yet shown itself evident in the inflationary data, but my own sense, and I bow to the expert here, is that that's only a case of time. And the worry is it's not a case of inflation jumping up to the top end of the Reserve Bank target range. It's the risk of inflation is running away with itself. And we certainly, you see that in the labor market. We see that when we're trying to hire, we see that because of the shortage of skills, that labor costs will start, as you would expect, will start to climb. And just what that means long-term with interest rates, I think is one of the big unknowns.
Yeah, well, look, as I said, the government's really pushing hard. And what are they pushing hard on? If you take a step back, half the jobs that are created each year in this country come from people who have just arrived in this country by migrants. And so the government's clearly worried about the lack of population growth causing a sort of slowdown in economic growth. And they're really trying to get participation up and get unemployment down to compensate for the fact that we can't access the global labor supply because the borders are closed. But I just wonder and worry that they're pushing on something that's not going to respond easily, and you're going to get wage shifts. Because the idea that full employment or the NAIRU or whatever concept you want to describe is 4.5% and we can be guaranteed of that is actually very naive and simplistic. And this whole strategy, business is at the coalface of whether or not this economic strategy is going to work. And so I agree with Joseph that we're going to see price movements. It's just whether or not they translate into an inflation problem. And that all comes down to wages and inflation expectations. It all takes time. As economists say, it happens with a lag. And of course, central banks around the world are telling us, just like they did in the early 70s, we're going to look through any transitory or temporary.
Transitory, that was the word used.
Which is they did the first oil shock in the 70s, and it got entrenched. So I'm not saying we're at the start of the 70s again with that big inflation period, but I think there's the real macroeconomic challenge that businesses are going to be confronted with is trying to manage these capacity constraints.
Yeah, is this funny talking about transitory and macro economists, because on the ground, and as small businesses are, we were talking about the timber shortage on my program the other night, and the phone lights up. You can see when an issue touches a nerve, the phones light up, the board goes green. And we had someone from a timber mill ringing up about they can't get the skills and the workers they need in the timber mill. We had a carpenter ring up. He said all the big builders, the prefab builders, are buying up all the timber, hiring huge warehouses and stockpiling timber. So if you're a small builder or in the smaller end of stuff, you can't get your hands on the stuff. And then we had someone else, another family-run building company, and they said, in fact, they'd already moved to steel frames because they cannot get the timber. So the issue is obviously there. I wonder how chronic you guys think it is and widespread. Are you experiencing any of this type of thing, Natalie?
So, obviously we have the state of Victoria is staff shortages. And what our worry is that there's just, we see the unemployment, the people are just just, do not want to work in the hospitality industry. So we are already paying higher wages than what we were 6 months ago, just purely to get staff on board. So we're already absorbing those costs. Then we've already had price of beef. We're quite, two of the restaurants are quite steak focused. So beef is one of our predominant menu, high sales. And the cost of meat is just going through as well, through the roof. Again, we absorb all those costs. Fruit and veg was obviously quite affected by the fires early on in the year, so that was pre-COVID. So there are a lot of other cost factors that we are absorbing at the moment, again, as a small business, but we aren't passing on to the consumer at this stage because we are too also cautious that even though there is a lot of people who have a lot of money again, people are very cautious of their spending, and we can't sort of like elevate our prices too much to kind of, balance it out. So my wage cost has significantly gone up comparative to what sort of like 6 months ago. And I'm forecasting at them to actually even further increase, not, rebalance.
But this is it, isn't it, Joseph? That this is part of the forecasting now. I think businesses have to, or small businesses have to get a handle of this issue pretty quickly.
No question about that. I mean, on a positive, as I mentioned, the build-up of investment demand is evident in the growth that we're now seeing in bank lending to small business. I mentioned that we have never seen our own lending pipeline of work as being as high. And of course, access to cheap debt is one of the strong features of the economy that we are in today. I mean, the banks are literally falling over themselves almost to lend into the SME economy after a decade and a half of treating the SME economy as if it had a triple U virus of unloved, unwanted, and undervalued. That seems to have changed, which is good. But the key is confidence, and with confidence, you can get your mind around inflationary pressures. You can get your mind around how you're going to reset prices. But if you're living in a world where that confidence is very fragile, then that just makes these issues much more difficult to forecast. And I do think that in the country, and I'm heading off to Brisbane and Perth late tomorrow, Wednesday in Perth. But speaking to my colleagues there, it's almost like a very different, certainly in Perth, it's almost like a very different world. Very confident, a lot of investment. They feel quite secure from the risk of COVID. Never should be complacent. But if you're sitting in Victoria, and the country, to my mind, is becoming a little bit fragmented in terms of the strength of confidence to make investment decisions, which is a great pity because for the first time in many years, we started to see businesses making serious intent to invest, having thought we'd come out of COVID in a very good economic position with cheap money and great chances to kind of make those quantum leaps in business expansion. So, fingers crossed that we don't see a prolonged situation in Victoria. But I think, again, I'm no expert on this matter, but I have been watching these issues for decades. I'm much more pessimistic about the risk of inflation building up. In other words, I do believe that we will see higher levels of inflation. Can't go back to the 70s, but certainly than anything we've seen in the last couple of decades.
I should say, if people who are on the virtual stream can ask questions, that's going to come direct to me here. So I think we've got about 10, 15 minutes left if people want to send those through as well. And everyone in the room will get a chance in the roundtable discussion to have a chat openly there. Yeah, Warren, I'm trying to get a handle on how, all this business activity, and as you said, the GDP numbers have come out last week. The economy is bigger than it was before, and businesses out there very active, buying up utes and machinery and all this stuff. Are they using cash, or are they actually borrowing and investing for the future?
Yeah, the business credit numbers are actually not growing very much. So there is borrowing going on, but there's also a lot of debt being repaid. So I think these government stimulus measures of the last year have cashed up a lot of businesses, and that's what they're using at the moment. The instant asset write-off has been hugely successful. And we now know that over the 6 months to March, non-mining business spending on plant and equipment had a surge I think almost 15%. So that's a really positive feature of the economy. And I think it shows that the capital stock in this economy was getting old. It hadn't really moved for 10 years, that amount of spend. So it's still just above its 10-year average. So there's a long way to go before we can say that businesses is really up and moving again. But in the last 6 months, we've had a big hit, but they haven't really been borrowing new money as a whole sector. So this government stimulus has been very effective in getting that spend happening, because clearly businesses are funding this from cash on balance sheet.
Yeah, okay. And Nat, you might have a view on this as well. The idea of, this is a time when they say, chaos creates opportunity, and this is the time to go in hard and be aggressive and plan for the future. But yeah, as you said, you don't even know how many weeks you're in lockdown right now. So how do you feel about the idea of investing for the future? You've got a strong brand, you've had a strong company for many years.
Yeah, it is a kind of catch-22, correct? Like I said, I know that there are a lot of opportunities out there at the moment. Like there, and particularly this, I think lockdown will hurt a lot more, as I've read that a lot of SMEs basically just have a month's savings in their bank account basically to kind of get them through. So if we're talking 3 weeks, then that kind of really takes a big hit. So in the restaurant industry, there are quite a few people who have kind of said, well, two things actually. A, I'm sick of Victoria, that's it, I'm packing up shop, I'm moving interstate and I'll set up a restaurant over there. And B, the others that won't kind of make it. In that, there is the opportunities for, like you said, we are quite a strong brand, very focused, to walk in and pick up something that is a fabulous opportunity and just, take it over and start it up. Do I want to do that? Half of me is yes, and the other half is no way, I just can't bear the thought. So myself and my brothers and business partners are both in that kind of way of what do we do, So I don't know. Yeah. It's a risk that you do have to take, and that's what business is. Perhaps this 4th lockdown has made it even more, for me, a bit more hesitant. If we hadn't had a 4th, then perhaps in another month or 2, I'd be like, yeah, let's grab something now while the opportunity is good.
What's going to be the trigger? I mean, Joseph, I guess if we knew the purpose of these lockdowns and, the metrics that were, basing them on, that would probably help, because I don't think we even realise the whole purpose of it at the moment. But Joseph, is there a trigger for businesses to dive in? And
Well, the criticism one would make about the current lockdown is the really poor communication from government. The one, and I contrast that to the situation in New South Wales, where when we were looking at lockdowns, there was very proactive communication, and it was a measured approach, and people felt that you could manage through uncertainty because there was some sense of leadership in sense of communication that was measured. And there's no evidence of that in Victoria, unfortunately, and that's just really unhelpful, because communication is the minimum that one should expect from leadership in times of uncertainty, and it's been totally absent. Having said that, I still believe that and it really picks up on Warren's comment about the age of stock investment in the economy, that there's a great opportunity, given how cheap and how available capital is, our debt capital, for businesses to not waste the crisis, so to speak, to get on the front foot. You think through the risks, that's really important, but to look at the opportunity and not sit too much on the fence. I mean, this will pass. I mean, I think the world will, as many commentators have said, will come to learn how to live rather than eradicate this virus certainly over the next couple of years. So it's learning how to live with it and pushing ahead on creating the businesses of the future. And we've seen lots of that happening in pockets around the economy.
Well, you said businesses, the banks are very hungry to lend, as you've said. You've got CBA trying to eat the business banking lunch of the NAB. You guys are in there. So they're hungry to lend, but I mean, what numbers are you going off? Do you go, when you're assessing businesses and looking at loans, are you going pre-2019? I mean, you haven't got a run of earnings that you can trust.
Forward-looking.
Exactly.
Forward-looking.
So do you think the money will flow, or the banks, particularly the larger banks, are they going to struggle to,
industry.
Work out who to lend to, or is it easier than that?
I'm confident that subject to this not being a prolonged lockdown in Victoria, that we will see a growth in credit to businesses that goes back to, because we haven't really seen that since the GFC in any material way. But everything seems to me to be set up for a period, and the economic headline indicators suggest that too, that over the course of the next 2 years, that we'll see a significant amount of expansion in bank credit that will help businesses invest in the future.
Mhm.
I'm confident about that. And we will benefit from that, but the system will benefit, as a bank, that is, the system will benefit more broadly. There's no shortage of appetite.
Mm.
And I say that, knowing that the whole raison d'etre behind Judo was a lack of appetite from the banking system to lend to small businesses absent the availability of property as collateral.
Mm.
I sense that has and is changing. The banks are being a lot more aggressive, certainly in the marketing, about their willingness to support small business. And so everything, to me, from my mind, just seems set up for a very strong next 2 to 3 years.
Competitive.
And competitive, which is great, because competition is which improves everybody's performance and makes sure that our small to mid-sized business economy gets the service that it richly deserves. Competition, not regulation, competition.
Yeah, and you've always been about relationship banking. And I actually, Natalie, when I saw you on the list here today, and as you're a customer of Judo and you wanted to be involved in this panel, I thought that was fabulous, because often when I speak to people with small business loans, I say, well, once in a while, what do you want out of a business bank? I talk about business banking once in a while, and I'll say, tell you what I want from my business bank. I don't want to hear from them. I don't want to speak to them. I don't want to hear from them. And here you are today, jumping in and having a chat with your business bank. Yeah, I know you're very passionate about this.
Exactly what Joseph said, that the minute that we started with them is of how supportive they are of SMEs, and I absolutely agree. Having been in business over 10 years, and prior to that, my father obviously been in hospitality and having his own business, that get funding and credit from the big banks for an SME, and particularly hospitality industry, has been extremely difficult. And to praise Judo, Judo was just an absolute dream, and it just makes it, yeah.
Hey Warren, so what do you think are some of the levers we need to still pull to switch this from people burning through cash to getting small businesses to invest?
Well, I think as we've just heard, there's a lot of potential appetite there. There's certainly seemingly more appetite in the banking system. So it looks like all of that is adding up. I mean, for me, I'm worried that businesses won't invest if they can't get the labour. And so the budget did have lots of initiatives around skills and reskilling, upskilling, training. But I'm always suspicious about translating that into outcomes on the ground. The federal government doesn't have a great track record with these things. Throwing money at this problem doesn't always create quick results. And a lot of really effective training actually happens in-house. So let's wait and see. But the key for me is, this really bold push by not just the Reserve Bank, but the government, the Treasury, to drive wages higher, to get inflation back up, get unemployment down, really in a heavy-handed, demand-led sense. I mean, there's two ways you can get wages up. One is just to drop the unemployment rate, push the demand for labour so hard versus the supply that you get a price response. The problem is that's not the best way to get wages up. The best way to get wages up is to have a really efficient economy that is productive and businesses can afford to pay more. And the one thing that does worry me, I suppose, not just in terms of getting labour, but it's also that if businesses push hard, wages go up, you don't get the productivity, that it doesn't last. It lasts a few years. Businesses end up wearing it on their P&L. Look, that's something to worry about. But
this is already happening with Natalie's business. Even before the lockdown, Natalie, well, like so many other hospitality businesses, you'd actually had to move away from 7-day-a-week trading.
Correct.
Yeah.
So we're now 5 days trading because we just don't have enough. And Warren, that's exactly a great comment that you made, and that's exactly realistic to our business as well. Another reason why we can't go and expand, like we've done pop-ups at the Snow before, which was a potential for us to do again this year, but again, with COVID closures and things like that, it's too risky. But we simply don't have the staff to kind of send them up there. Now, for me to employ like a commis chef or chef de partie. For them, that takes at least 4 to 6 years to get to that level. So that's, you know, I can't set up a new restaurant and wait 4 to 6 years before I can have the staff to sort of like, you know, run my business. That's our worry as well. Is, I mean, obviously I know that the borders will reopen and then there'll be quite an influx, I think, of people coming to Australia. But, you know, the future, looking in the next kind of 6 months, is not. Yeah, it's difficult.
Yeah, but this is happening all over Australia and parts of, you know, tourism affected Queensland. And I mean, this is happening in Margaret River and in WA. So Joseph, we could just got to open the borders then, do
Yes. Well, then it's hard to forecast when that'll happen, but that has to happen. And
This is a small business issue.
it's a small business
Is a
issue.
massive small business
It's a
issue.
huge small business issue. And it's frustrating, frankly. But, you know, that's the world we're in, where there are what sometimes feels like knee-jerk reactions to, on the surface, very manageable problems. They just throw everything up in the air and undermine confidence. So it's, you know, it's a reality of where we are today, but hopefully we're going to get back, we're going to get more common sense being applied to these issues. And as I've mentioned earlier, a realization that eradication is not, it's highly likely not to happen. And therefore it's how do you manage? And because there's vaccination is a big part of that. But the more and the sooner we get stronger leadership on this from our political masters, then the more people, the business community and society generally can feel a lot more confident about the outlook.
Well, business will play a great leadership role at some point. I think there's still some reluctance to be diving in, but they'll be a big part of it, that's for sure. So I think when we move to the table afterwards, we're going to, I think, say goodbye to the live stream in a minute. We'll go to the table afterwards and you guys can have a chance to dig into all of those issues. But yeah, I think so many competing themes, and the issue is just not for businesses to be surviving it, but to work out how to navigate and thrive in what is obviously a very disrupted environment. So Johnny from the Trans Tasman Business Circle, thank you.
Thank you very much to our esteemed panel. To Natalie, to Joseph and Warren and Brooke, of course. We have a national economy, we have sub-economies. And as we've heard today, whether they're regional, whether they're sectoral, whether they're demographic, and above all, they're a personal economy. And Natalie, you shared with us the personal side of what the SME sector, much of it is going through. And so I think we should all be aware that while the overall macroeconomic story looks great, we cannot disguise the fact that there's a hell of a lot of pain. So thank you very much to our panel, Judo, again, for supporting the SME sector in particular. Thank you to all of our virtual colleagues, wherever you are throughout Australia. And thank you again to our wonderful host at Ashurst for partnering today. Have a great day.